Good evening to one and all present here today. I welcome you in today's mega event where Mr. Sunil Damania, CIO Mojo PMS, will discuss the equity outlook for the calendar year 2024. We would also be having a Q&A session, so please post your questions in the comment box below. Over to you, Sunil sir.
Thanks a lot, everyone, and very warm welcome. I think this is the most much awaited webinar that everybody is looking forward to. And we are going to discuss very interesting things about how do we see the market in 2024. 2023 was excellent year for the investors. While first quarter was not so great, but the next three quarters really made up for the rest of the year. So how do we see the market in 2024? And I know many have written us various emails, about what they want us to cover in the webinar. I have made an attempt to cover, but in case if that's not been covered, you can feel free to ask me when we do a question answer. In fact, there are some of the things I could not add also for the very simple reason because this presentation itself has gone a little longer. So if I would have added more slides on some of the people you asked for, the things would have become a little longer. But having said that, I'll try to cover as much as possible. And I think it should give you most of the questions that are bothering you at this point of time and how do we see the market. But before I begin this webinar, just a disclaimer that investment in the equity markets are subject to market risk. Please read the offer documents very carefully. Please note this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk. Please consult your financial advisor. And past performance is no indicator of your future returns. And there's one more disclaimer. Note that this prediction have a higher chances of going wrong. Hence, please consult your financial advisor before making investment decision based on this prediction that we are making. These are our guesstimate, our belief that what we believe, not necessarily that market is obliged to behave the way we are suggesting it to behave. So let me start with the wish you the happy new year for the 2024. This is the first time we are meeting in 2024. 2023 was excellent, and I wish that 2000 turn out to be healthy and wealthy for everyone. With this, let me start with what we predicted last year and where do we stand. Did we predict it and what happened to that? So I think first thing we stated very loud and clear, and maybe we were the only exception in the market, that 2023 would be the year for mid and small cap. And we all know that mid and small cap has given return in excess of 45% in one calendar year. So that's clearly turned out to be. And remember, 2022 was completely a washout year for the mid and small cap. We had put 20,100 target for Nifty 50 and market overcrossed that numbers. While the direction was right, but market Nifty closed at 21,731. So again, the market has surprised us on a positive side, but I'm very happy that the direction was very much in line, because if you go back in January 2023, a lot of people were predicting little gloom and doom kind of a scenario, but somehow the market did move up from the second half of, maybe the second quarter of 2023. We suggested FII was net sellers in 2022, and they continued doing that even in the first 2 months of 2023. But eventually, they pumped in 1.71 lakh crore. We predicted at least 1 lakh crore, and I think again, prediction was right. And at that point of time, there were reasons not to invest by FPI, but we believe that positive flow should be there in 2023. We also predicted that Nifty can go as low as 16,300 in 2023, and the lowest level was at 16,828. So in that sense also, we're very close to what level we predicted. 2023, we said it will be a year for the growth stock, which was not the case in 2022. The value stock did better as compared to growth stock. And one of the reasons why we believe that 2023 would be a year for the growth stock purely because of risk on strategy that should come back. And we have seen that risk on strategy coming back very, very strongly. One of the reasons we were bullish on mid and small cap because we believe that risk-on strategy will be there, and we have seen that not only in the mid and small cap, but we have seen some of the crypto like bitcoins going up by 160, 170% in 2023. Clearly says that the 2023 belong to the growth stock. That's exactly what we predicted. And IT, pharma, and capital and goods and infra, we had predicted that they should do well, and they actually outperform the broader indices. While we had some hits, there are also misses also in our prediction. We were strongly believing in the beginning of 2023 that there will be a rate cuts, and our sense was that it should happen by the second half of 2023. Unfortunately, that did not happen. It just got delayed or postponed, I would say so, but there was no rate cut was announced, and that's where our prediction did go wrong. Another prediction which did go wrong is that the crude oil price, we believe that it should be in the range of $90 to $95 per barrel. And actually it turned out to be $82 per barrel. So in other words, we were off by almost 10% in terms of average crude oil prices. And our view was that rupee should appreciate against the dollar. Unfortunately, rupee did depreciate. So normally that has been the trend for many, many years, where rupee would depreciate against the dollar by almost 4% or so. This year did not happen. In fact, it just depreciated by 0.6% for 2023. So almost 6 points where we went right, and there are 3 points where we did go wrong in our prediction. And hopefully we should have a similar kind of a trend even for 2024, but let's see what there. So what I've done actually, I've covered what are the things I'm going to cover in this presentation. What is the global economic growth outlook? I just remember that some of you people did ask me, we should have a view on US and China, how it's going to do. Many people are a little anxious to know what would happen to the Fed and RBI, what would happen from the Fed and RBI in terms of rate cuts. Another point that everyone wanted to know is about the crude oil. What would happen? Because we all know that Red Sea right now is going through a problematic, and Musk basically stopped cargo. The situation is little volatile with the Israel and Hamas, and that's one thing. So I'm going to make an attempt to understand where could we see the crude going forward. Again, we all love FII, and will FII continue the love story with India continue or not? Because pumping 1.71 lakh crore is a record itself by FII. So should we continue that similar kind of inflow in 2024? Gold and silver, outlook on that, what kind of impact general election will have, because this is a time we will have general election, and I think a lot of people are a little anxious about what would happen and what kind of impact it should have in general election. I think most of you, when we ask for the request, what point they want to cover, and many of you basically did write to us saying that please cover that. What's the downside risk to the what is the downside risk to the Nifty from 2023 level, and what kind of gain should we expect for large, mid, and small cap in 2024? And of course, what are the sectors that we need to watch out for? So let me start with, and what you can see here now is that I have physically put it where do we are in the presentation, whether right now in a global economy, then we'll go to rate cuts, crude oil, and that's complete heading, so you know where are we in terms of what we call presentation. So, and I must tell you that please stay on till this presentation go on. Why? Because some of the interesting data points I'm going to discuss in this webinar, and it will help you to take a very informed decision. Whether you agree or not, that's a different story, but at least it'll help you to think in that direction what we are saying. So global economic growth, and I think this one thing, there seems to be consensus. If you remember, in beginning of 2023, the World Bank came out with the report saying that global recession would happen. There will be a hard landing for the US economy. Right now, as we speak, if you look at it, the data, I think the world economy is likely to slow down. If you look at G20, which is likely to grow at 3%, will grow only at 2.8% in next year. So there is and of course these numbers will keep revising as we go forward, But that's the thing. If you look at the China, which is likely to grow at 5.3%, is going to grow only at 4.7%. And if you look at the US, which is going to grow at 2.4%, is likely to grow by only 1.5%. So I think that's clear-cut signal is that US is going to slow down. Even the news is that India can also slow down. But despite that, India would be one of the fastest growing economy in the world. But overall, it does give a impression that 2024, we should not expect a robust world economic growth. Now, what does this mean actually? It clearly means that some of the companies which are focused on the exports will face some kind of headwinds in the coming months. Why? Because if the demand is little low, the probability of you exporting, and then if the demand is low, I think more competing countries will try to push that product, and there could be a price war among the countries, those who exports to the places like US and the Europe. So I think we need to be little cognizant of that. I think the situation is not likely to be very, very robust on the economy front in 2024. Now that comes to if that's the case, then what should happen to the rate cuts? Am I right, isn't it? And so how many rate cuts? I think no one is now talking about rate hike. If you go back 2023, everyone was predicting how many rate hikes can happen. And see the scenario, no one talks about the rate hike. Everyone is talking about, now the question is very direct. कितना rate cut होगा? कोई hike की बात नहीं कर रहा है. So if you remember 2023, Fed did almost 100 bips rate hike, while RBI did only one rate hike, that was of 25 bips. And since then, RBI has been maintaining a status quo, even though the Fed has been hiking the rate of interest. That's a very commendable job in terms of rupee. Why? Because as I was saying, the rupee did depreciate, but depreciate only by 0.6%. This is despite the fact that Fed did hike of 100 bips and RBI did. Normally what happens if the Fed hike the rate of interest, tendency is to move away that money from the emerging markets to the stable, and when Fed can, which is the most stable and most secured country, can give you higher rate of interest, it should create some amount of pressure on the emerging economies' currency. But despite that, we did not see that. So sometimes we think, ye hoga to ye ho jayega. I think market has its own wisdom and has its own way to analyze the things. It did not happen. The reason why Fed had to hike the rate of interest, inflation seems to be more stubborn, and that's the reason. And I think from era of, inflation supposed to be transitory, and then, statement was that it's a little more like a well-entrenched in the economy, and the central bank commentary kept on changing from 2021 to 2022 to 2022 to 2023, and so on and so forth. Now, there seems to be a consensus among the money economists across the world that inflation trajectory is going to be downward. Our data analysis suggests that I think it's going to remain a little sticky, at least for the first half of 2024. And the reason is very simple. The demand for goods and services will be relatively higher, and there still be a supply constraint, basically, which would keep the inflation at the elevated level. There's one inflation that's going to remain a little sticky. It seems like food inflation right now. Why? Because of not so great monsoon. Rabi crop also could be a little challenge, and if the winter is not at what it should be, it could impact either the productivity or the quality of Rabi crops, and that could happen as we speak. So our sense is that inflation can start coming will start coming down. So first half we don't see much of a change in the inflation, but something at the fag end of second quarter we should expect inflation softening, and if that happens, I think Fed should start lowering the rate of interest. Our sense is that on 14 June, when the FOMC meet, that's a place, that's a time when there could be a rate cut from the Fed. That's what our sense is, and there could be 100 bips total rate cut from the Fed. Same way, we do expect RBI to do rate cut much ahead of Fed, and maybe before general election, because election will get over, the process will get over somewhere by mid-May or so. So we expect 14 June as a rate cut from FOMC. We expect RBI to do before election, general election, 25 bips, and total we are expecting total 4 rate cuts of 25 bips each. So in other words, both RBI and Fed is going to basically do 100 bips rate cut in 2024. Remember, this is a very volatile data points because both RBI and Fed will keep looking at the economics. The data has been keeps changing. Even RBI keeps changing its outlook on inflation from monetary policy to monetary policy, and hence we need to keep watching the data. And if need, we need to do some amount of revision in our prediction also, whether it will be 100 bips, whether it will be 75 bips, or it will be 120 or 150 bips. And right now, based on whatever the data is available in the public domain, we do believe that 100 bips rate cut can happen from Fed as well as RBI. Remember, slowdown in the world economy will also further spur or will also induce the central banks to do the rate cut. So I think that's another thing which goes well with the global economy outlook. Now coming to crude stock, okay, and what comes as a surprise to us is that over the years we have been laying more and more importance on the crude oil prices. But the data, when we look at it, it does give the impression that whenever the crude oil prices goes up, so happens with the market. So if you look at this data, this is the India's crude oil basket price, am I right? That we have taken. Now, what you see, the red bar is basically nothing but as compared to the previous year, whether the price have declined or not, and that basically put in a red bar, am I right? So when you look at this data, and what comes as a big surprise to is that whenever the crude oil price surge, or not necessarily it is negative for the market. The reason I want to make you understand, because sometimes we emphasize too much on one point, and we come to conclusion that this is the way it's going to happen, but that's not, in reality it does not happen. And why I'm explaining you, let me say that. So in 2002 to 2007, okay, the crude oil price kept on surging from $24 per barrel to 27 to 35 to 51 to 63 and 70.1. And during this period, India gave one of the best returns to the equity investors. Why? Because it on a 6 years in a row, it gave 36.5% of CAGR to the investors. Something similar happened in 2010 and 11, where 61 going to 78 and 108, and during the same period, CAGR returns from the market was 45.8%. So sometimes we get little obsessed with the crude oil prices. Of course, it does impact inflation, it does impact rate of interest, but somewhere the data clearly shows, the historical trend clearly shows that crude oil prices perfect correlation, not negative correlation to the indices. Having said that, despite, there was a fear when this Hamas and Israel war took place, there was a fear that output cut could result into a spike in the crude oil price, but nothing that of happened. On the contrary, the crude oil price will decline in 2023 as compared to 2022. Well, we were also expecting crude oil price to come down because we predicted $90 to $95 per barrel from 97.6, but I think it further declined and it gone down to 82.2. Now, the point is that what do we expect? We expect 2024 to see another year of decline in the crude oil price. There are a couple of reasons why we believe so. Number one, the global economic slowdown will definitely impact the demand for the crude. Second thing, global oil production is going to go up by 1 million barrels per day in 2024. Third thing, energy transition is happening, and that's going to keep the demand little lower for the fossil fuel. And shale gas in the US is also increasing. That's another reason. So this is despite supply cuts announced in 2023 by some of the OPEC members, we did not see spike in the crude oil price, and the contract came down. And keeping this fact in mind about the global slowdown, higher production, transition to the green energy, and so on and so forth, I think we do expect that crude should be just $75 per barrel as compared to $82 that we saw last year. Coming to the FPI, will FPI love story continue? And I think when you look at the data, FPI invested highest ever amount since they started investing in Indian market with 1.71 lakh crore, which is the record. In fact, it's much higher than what they invested in 2020. That was the COVID year, post-COVID, when things started improving. They pumped in, and look at this. they've surpassed that number also. In fact, it has come as a big surprise. Even 2007, 2006, when the market was on the hike, they were only invested 71,000. Of course, the market cap of India also increased, and hence India can absorb larger chunk of FPI money coming in. But this is the record that they did that. So now the question comes, what next? After record year, what could be should we expect another record year for FPI or not? Our data analysis says, and when we look at the trend that we have seen in the previous slide, normally whenever there is a high inflow, the next year the what we call inflow is more muted. Like we have seen 1.70, and then we say 25. Even see 132, and it was muted. Here it was 75, and it's muted. So whenever it crosses the high, normally what we have seen that the next year the FI flows is muted. And one of the reasons is definitely global economy slowdown that will come in. Basically, people will go for a little risk-off strategy rather than risk-on strategy. FI has made a lot of money in the smart rally that we saw in 2023, and they will definitely lock in some of the profits. And another thing is the valuations of India is no longer as cheap as what used to be in the beginning of 2023, and that means it will limit the fresh inflow from the FII. So I think these are the factors. We believe that FII flow is going to remain little muted in 2024. So don't expect too much returns coming in, too much inflow coming from the FPI. Now come the gold and silver. And a lot of you people love what should happen to the gold and silver. Will that continue to sign in 2024 or not? If rate of interest has to come down from the Fed, it means gold should again be back in demand. Why? Because when you invest in a treasury, it does earn the interest. Gold per se does not earn the interest, isn't it? And hence, what we historically trend has been that whenever the rate of interest goes up by Fed, the gold normally tends to go down, and when the rate of interest starts going down, the gold should do well. So that's one reason I think that is positive for the gold. Second thing, I think the geopolitical tension normally is a good for the gold. People prefer to move to the safer assets class. When I was saying that there is a risk-on strategy may not be there in 2004, people may prefer to go for the gold as a safer assets class. If you look at last few years, a lot of central banks are buying more and more gold as a part of their forex reserves. And that's purely because of de-dollarization that's happening across the world. India is also doing, and we did one presentation in the trend analysis, future trend analysis, where we have showcased that thing, that how more and more central banks are buying gold. Hence, overall outlook on the gold looks little promising. We do expect that gold should give early teens kind of returns in 2024. When we say early teens, that means 13-14 kind of a percentage return that one should expect from gold in 2020. These returns, I'm saying in a rupee terms, not in the dollar terms. Silver looks extremely promising. Why? Because of the whole world is moving towards the green energy, and silver has a utility or the inputs are required for the green energy, whether it's a solar panel, whether it's your electrical vehicles, whether it's your 5G gear, the telecom, it calls for a demand for the silver. Now, while demand is likely to remain a little robust, the supply is likely to come down by 2% in 2024. Why? Because not many people have gone for the capex on the silver side, and that could mean that the demand is going to remain high, supply is going to remain little low, and due to that, the price of silver likely to remain little strong. We are expecting about 15 to 20% gain in 2024 for the silver prices. Come to the election, and I think this is one topic that everyone is more excited, and also anxiety that basically brings in. I know our conclusion will surprise all of you, but we will state what we believe is likely to happen. So every 5 years India has an election, and market get little jittery about what could happen to the election, and we did see that happening post 5 assembly, the assembly election that took place. 5 assembly went on election in October 2023. When the election result came out, it did change the mood of the market. So what we have done actually is that we looked at what happened after the election to the market and what happened before the election of the market between 6 months, 3 months and 1 month. And these are the result date, if you look at it. And then how market based on that election result have moved after 1 month, after 3 months from the result date, after 6 months from the result, and who formed the government. In fact, when I was looking at the data I was also surprised that out of 8 elections that took place in this country, 5 times BJP has formed the government. Only 3 times the Congress formed the government. 91 government was formed by P.V. Narasimha Rao, 96 by Atal Bihari Vajpayee, 98 again by Atal Bihari Vajpayee, and 99 again by Atal Bihari Vajpayee. Congress again formed 2004 to 2009 with Prime Minister Mr. Manmohan Singh, and then 2014-2019 by BJP. Now, in the market, there is a famous saying that buy on news and sell on rumor, buy on rumor and sell on news. And I think something similar is going to happen with the election result. Why I am saying so? Today, there is general consensus in the market that BJP is going to form the government. And that's one of the reasons we've seen a smart rally happening between November and December. Am I right? So, the general consensus believe that BJP aa jayegi. Now, if that's going to happen, it's there in the price. Remember, it is there in the price. That's the reason why market moved up. So, what is the probability? Is there in the price. If the BJP comes to the power, don't expect a big rally. I again repeat, if BJP comes to the power, do not expect big rally in the market. If you will be surprised to know that in 2019, when Modi again became a prime minister, in 3 months' time, the market was down from the what level it was? -6%. Am I right? So, in other words, the good news is in the price. Now comes the bad news. For some reason, if BJP is not going to form the market, I think that's going to be a big negative surprise for the market. And what could happen, our sense is that market can save off 20% if that's going to happen. Of course, that will happen the day election results comes or the exit survey comes and they believe that is not going to happen. I think market is going to. And it would take minimum 6 months to recover from that level. So, in a nutshell, बीजेपी आने से मार्केट ऊपर नहीं जाएगा. बीजेपी नहीं आने से मार्केट गिर सकता है. So there is a more downside risk to the market because of election. There is a limited upside that our data analysis suggests so. I know it's not going to make you a little happy, but we need to say what we believe is going to do that. Of course, I'm going to come on my outlook on Nifty and mid-cap in the next few slides. And right now, we are almost at the mid-level of our presentation. We have come to the election and then we are going to discuss about sectors, what could a potential downside risk to the market, then market outlook, and then what strategy you should be adopting in this market. Let's come to the sectors and theme that we believe should do well. So let me start with pharma. It was a call last year also, and we were a little outlier in the sense we were a little contra on that way. And we did believe that pharma should do well, it did well. I think more or less the generic prices on US are stable or improving. That's one factor which goes in favor of the pharma because it was declining and now it's stabilizing and has a chance to go up. Europe as a region is also offer a great opportunity for Indian pharmaceutical company. And if you look at some of the data which is floating around on the internet, that almost 20 to 30 billion kind of a generics will go, not the generics, the products will go off patent in next 3 to 4 years. And now that offers a big opportunity for the Indian pharmaceutical company. At the same time, domestic pharma products is showing a good growth. In fact, I was discussing someone and I realized that every year, each and every household is spending more amount of money on medicine than what they were spending last year. And just ask that question to yourself also. Did you spend more money in 2023 on medicines as compared to 2022? And most of you would say yes, that they must have done. In case if you have not done the analysis, that's a different story. But if you do that, probability is very, very high that you would have done that. Another factor that would benefit pharma but not good for the humankind is that global warming is a thing which we like it or not. And our understanding is that global warming means more disease that's going to come on the horizon. Okay, more bacteria will get produced and more, and which calls for more amount of medicine that you need to take. So I think global warming is another thing which basically favors pharma. So we believe that the tailwinds are in favor of pharma, and hence pharma should do well. Another sector which we continue to believe should do well is capital goods and infra. So I think it's a continuation of our same theme that we were talking about 2020, which will get extended in 2024 also. If India has to become a really formidable competition to the China, we have no other choice but to improve on our logistic cost, because and that logistic cost can be improved only if there is a focus on infra. And if that's going to happen, I think India will keep spending money on infra, whether it's a state governments, whether it's a central governments. We need to spend that money. Another thing, I think some of this private capex should also come into the force, because we are almost at 76% capacity utilization for the private sector, and that should further help the infra companies to improve their order book and so on and so forth. And since we are expecting 100 bips rate cut from RBI, it should further spur for capex, because sometimes the businessman will hold back its capex because of higher rate of interest. But when the rate of interest start coming down, it will encourage. Why? Because your break-even point will become at a much lower level when this what we call rate of interest start coming down. Railway, I know we are a little contra again on this one, but we believe that railway as a theme should play out very, very well. Whether it's a dedicated freight corridor, whether it's a you look at the high-speed railway, whether you look at the bullet train which is running, Vande Bharat, then there is a semi-luxury train, so on and so forth. I think it's going to be a very long-term growth story. In fact, government has said that any city which has more than 20 lakh population will have metros. And you go to the city, after city, you will see that metro work is on. I was in Indore and I saw that metro is there also. I was in Surat and I've seen metro work is there, and so on and so forth. So not only the metro cities which will have metro, but I think that's another opportunity that's going to come up. Indian Railway would need about 90,000 wagons in next 3 years because of dedicated freight corridor, and I think government also want to increase the share of rail freight in the years to come, and hence that will, and again railway stations are basically modernized, signal systems are basically improved, more number of tracks are being laid, so on and so forth. In fact, when you look at the data, and if you look at the freight wagons, 35% of the freight wagons in this country are 15 years or more. There will be a replacement demand for that, and that's another reason why company associated with the railways, and that also includes some of the companies which may not be directly related to this, to the railways, could also. In fact, I was talking with some of our PMS customer who came down to our office, and this company, I was not aware, to be very frank with it, that they also supplied to railways, but they were supplying to railways. Railways are one of their customer. So be careful. Don't only look at the company which are pure railways. There are many other players who also get the revenues from the railway, and they could also be the one who could get benefit of the huge modernization plan that the government of India has on railways. So I think that's one thing that we believe should play out very well. And another thing which we believe is a defense. I think there was one analysis which was done by one of the think tank, and which says that if India has to go on a war, how many days defense, what we call the armory that we have, or the defense equipment we have, which can sustain that. It's not a very good number. I think government of India does realize, and then we have now two fronts open up. Am I right? The China and the on the western side, the Pakistan. So I think government will have to spend a huge amount on defense, which government has been spending. another thing which is really going to do well is that one is the upgradation which I talk about, whether it's a navy, whether it's a air defense, whether it's a the army, and so on and so forth. Every place we need to do upgrades, and why we do upgrades, because of geopolitical tension and other front which has opened up for India, which the government of India is doing and will continue to do that. Third thing is the self-reliance. I think government of India previously used to import. Even if the defense budget goes up, the local company never used to get benefit of that. Now, Atmanirbhar Bharat, and I think theme is going to play out very extremely well for the defense. At the same time, exports. And I think the government has made a mission statement that we need to export more and more. And for FY 2024, day before yesterday, or or Finance Minister, Mr. Nirmala Sitharaman said, okay, we did exports of 20,000 crore in December, and target for FY 2024, which is this financial year, that is March 2024, we will do exporting 24,000 crore of defense. So I think that's one reason which makes us believe that defense is going to be a play. So it's not only a story of 2024, I think it's more of a structural story which should last for many. So the way we have seen 2002 to 2007 infra story being played out, something similar can happen with railways and the defense. That's what our sense is. Now, before I go forward, where do we see the market by 2024? Let me take you what should be the downside risk to the market, whether it's a large cap, mid or small cap. We did analysis and we realized that there is where can the Nifty can go in 2024. Our sense is that Nifty could go as low as 19,000 from the close of 21,731, which is a decline of about 12% decline that can happen to the Nifty 50 in 2024. But our sense is that it's not going to last at that level. So don't think that it's going to hang around that level for a longer period of time. Something similar also we predicted last year also, that it can go down, is not going to sustain at that level. And we did say that market, after touching that low, bounce back very, very strongly. Something similar we are expecting even in 2024. In terms of mid cap, we do see that BSE mid cap going down to 31,700 from the close of 36,813. That means potential 14% decline. And for small cap, it can test near about 35,000 level from the close of 42,674 that we have seen in the small cap, which is 18% decline. Remember, market can go further from this level also, or may not go to that level also. These are our internal estimates. Market can surprise more also on the negative side, or may not decline as much as we are predicting in this presentation. Coming to the market. Now, can the Sensex or Nifty, Sensex can give positive returns in 9 years in a row? That's a very, very critical question. Why? Because in the history, when we look at the data, we did not get a period where 9 years in a row, the market has given positive returns. So the best period that we have seen for the market in terms of continuous positive gain was 8 years in a row, which was 1998 to 1994. That includes the Harshad Mehta rally also. So, but that was the 8 years. If you remember 2002 to 2007, that time also the market was only 6 years in a row. So 7 years, 1998 to 1984, but this time 2015 was the last time with the calendar year we saw negative returns. 2016 positive, 17 positive, 18 positive, 19 positive, 20, 21, 22, 23. So 7 years or 8 years in a row, the market has given positive returns. So it did break the previous record of 7 years. The 9 years maybe record break hoga ke nahi. Now many people basically ask me a question on this one. Okay, if that is so, are we in the bubble zone? Is this Indian market, is it a bubble zone? Because now 8 saal to rally kar liya hai, so have we not in the bubble zone? I think that's one question that is bothering many of the investors. So we said, okay, let's look at it, because sometimes the moment you stare at the data, it gives you an answer that basically bothers you. So what we did actually, we look at all the various period of the market. What happens to the market, the rally. and what kind of CAGR returns that market gave during that period. And what we surprise is that despite it's a record 8 years in a row, that is from 2016 to 2023, which is 8 years, the CAGR return is only 13.5%. What does it mean? We are not in a bubble zone. See, that's the historical return that India has always been making, 14-15% CAGR. If you look at it over a 10 years, 20 years, 30 years kind of a period, Indian market always given 15-16% return. So is this the market has been hated market at this point of time, despite 8 years in a row that we have seen the market going up? The answer is clearly no, because look at 1980 to 1994 when the Harshad Mehta rally happened, CAGR was 36.6%. And when that happened, the next year, that is in 1995, the market fell by 20%. So that whatever the excesses were there, which was taken away by 1 year fall in the market. 2002 to 2007, we had a smart rally. And that was a global rally, 35.6%. But then we hit the global financial crisis and it took the index by half, 52.6% the next year, that is 2008. 2009 and 2010, again we saw a smart rally of 45.8% and the market declined by 25%. So as you can see, whenever the market has gone in excess of 30% CAGR, market tend to fall by more than 20% or something that. In 2012 to 2014, that is 3 years in a row, market gives CAGR of returns of 21. But in 2015, market did decline, but only by minus 5%. So then the question comes to our mind, क्या होगा? Will the market give returns or not? I think that's the question that comes. But having said that, please remember, we are not in the bubble zone. We are not what happened when Y2K happened. That is 2000. We are not in 2008 global financial crisis that happened. We are definitely not in that bubble zone. So first thing I want to tell you that despite market has gone up by 8 years in a row, which is a record, we are not in a bubble zone. Just 13.5%, which is in line with what historical returns Indian market has given. Normally when it goes little excess, then excess will come off by a correction. So that's not that we are into. So where do we see the Nifty then? By end of 2024. So we do get a sense that Nifty should be somewhere between 22,818 to 20,700. What does this mean is that we are looking at Nifty from close of 2020 somewhere plus or minus 5. Little more downward bias than the upward bias, that's what we are seeing. So why are we saying so? Why are we not so? Because if you remember last time we did say that equity market will give returns in early teens, and in fact Nifty gave almost 18% return, which is teens, but it's a higher teens, not the lower teens. So we had said 12-13% and market did surprise us. So why are we not so much gung-ho about this time? Purely because of the valuation that Indian market is commanding, the Nifty 50, which is likely to grow at 18% in 2025, FY 2024, is likely to slow down, is likely to grow only at 11% in FY 2025. And when you look at the historical returns, it does give an indication that I think this year should be the little muted kind of a market for the large cap. So then question comes, what happens to the medium and small cap? Because they did extremely well, 45% gain at least in 2023. So what we look at where does the mid cap, small cap and the large cap stands versus last year same time in terms of trailing 12 months and 10-year median. And what we realize that while Sensex and Nifty are little trading above the last year PE and the 10-year median, the BSE mid and small cap continues to trade lower than what 10-year median, while the mid cap even lower than what it was the last year same time, purely because of growth in the earnings. But small cap seems little expensive as compared to what it was last year, 24.3 versus 27.4. So that's what has happened. So as I was saying, with earnings are going to come down to 11% in FY 2025, as compared to 18%. I think there is a little kind of a muted great gain that we can expect even from the mid and small cap. So what we look at the complete the mid cap and small cap as a part of total market cap. And sometimes, many times, you people ask, how do we derive this data? Is nothing but we have defined mid and small caps are those companies which are beyond A group companies, and we merged the all market cap historically. And so we have used the same parameter since April 2012. It's not that we are changing our parameters to suit our argument. And what we realize is that it did move up. It was last year 5%, which moved to 8.4%, still below what has been the average since 2012 of average of 11.1%, which suggests that there is a further still scope for mid and small cap to move up. Now the question that was asked basically is that, have we seen the divergence between the large cap, mid and small cap? And we did see that in 2015. Well, while the large cap did decline by 5%, mid and small cap give returns in a very similar kind of it gives in a single digit returns, but positive returns in 2015. And market can behave in something very similar fashion, not exactly I'm saying that -5, 7.4 and 6.8 respectively for large, mid and small cap, but there could be a possibility that mid and small cap can outperform the what we call large cap, but the returns would be little muted with single digit returns that we are expecting from the mid and small cap. Having said that, please note that these returns would be non-linear. It's not going to come in a very linear fashion in 2020. In fact, we should expect a higher amount of volatility that's going to come within the mid and small cap space in 2024. So what are we saying? We expect 2022 to be range-bound market with downward bias for large caps and muted returns from the mid and small cap. Now, what should be your strategy then? So there are three phases in the market. Am I right? That's a bull market, sideways market, and bear market. What happens in bull market? Everything goes up, irrespective of fundamental. चलता है, सब कुछ चलता है. Sector चलता है, market cap चलता है, सब कुछ चलता है. More company will advance as compared to the decline. Like as I made a presentation, 3:1 has been the advance decline ratio for 2023. And Sensex or Nifty gaining by 1,000 points in a very short period of time is very, very normal. And in this kind of market, the quality takes a backseat. Momentum takes over. People, why? Because in bull market, everything will go up. And there is a feeling that, boss, मैं quality पे टिका रहा, तो मेरा portfolio underperform करेगा, so let me move. And then the people will then choose more and more, penny stocks, more and more stocks which are nowhere in the horizon, and people will try chasing those momentum stocks. So people basically become little, I would say, reckless in terms of buying the stock, because in the hope that आज लेके 20-25% मिल जाएगा ले जाएगा. And retail investors' confidence go up so high. Why? Because whatever they are buying is going up. Why? Because the tide is high. So it will lift all the boats, and they will start believing that they become experts also. So in fact, they will start advising to the experts, कि नहीं ये नहीं करना चाहिए, ये होना चाहिए, because they will have a view on, and nothing wrong, because they've tested the success of their stock selection, and they start believing that they become experts. Now, remember, all bull market ends up very badly. Okay, so seeds of failure are sown in the bull market, not in the bear market. So always bull market always ends up in a very, very sorry state of affairs. Why? Because when the market crashes, it creates a lot of confidence crashes for the investors, and that's what happens. So while the starting is good for the bull market, end is always little tearful for the investors. What happens to this sideways market? I think the sideways market is the most frustrating market for the investors, because थोड़े स्टॉक पार्टिसिपेट करेंगे, थोड़े सेक्टर पार्टिसिपेट करेंगे, एडवांस डिक्लाइन रेशियो will always be equal to decline kind of stuff, and frustrate investors very badly. And in order to generate returns, because investors will do something which they are not supposed to do, they will take undue risk, which normally do not turn out to be in their favor. Okay, and then frustration comes, that पैसा नहीं बन रहा है, पैसा जा रहा है. And I think this is the most worrisome market. Why? Because ना market आपको तेजी दे रहा है, ना मंदी दे रहा है. It's like मैं तो तुझे ना जीने दूंगा, ना तुझे मरने दूंगा kind of a stuff, which is a very, very difficult market to navigate. And many experts normally, even experts, I'm using the word experts, normally tend to go wrong in the sideways market. And what happens in the bear market? Everything goes down. Fundamental chalta hi nahi usme. Because market is in a very punishing mode. Just what happened in global financial crisis, some of the good quality companies also came under heavy pressure. सब कुछ बिकेगा, and fundamentally तुम कितना भी अच्छा story बताओ, कुछ चलेगा नहीं. In fact, market doesn't even ignore the good factors. Am I right? In the bull market, market ignores negative news. Nothing stick to that. It's like work except Teflon. In the bull market, no negative stick. And in bear market, no positive news basically stick. Okay, so that's what. In fact, thoda bhi negative news aega, market will try to amplify in a much this one. And that bear market basically creates a lot of fear. A lot of investors basically make a big mistake of reducing equity allocations to the equity, which should not be the case. In fact, we are supposed to be selling high and buying low, but that's exactly what happens. And the advance decline ratio is so poor, it clearly shakes the confidence. But people forget. While the bear market starts on a tearful note, it always ends on a joyful note. Why? Well, that's the time you should be investing more money in the market, because when you invest in the bear market, the next phase when it goes up, it brings a great amount of wealth for the investors. So while bull market starts on a jovial note, it ends up in a very tearful. While the bear market starts on a tearful, it always ends in a very joyful. So I think we must remember that. The reason I'm explaining you, because I'm going to present some strategy going forward. What should be your strategy for 2024, which will help you to understand. So I'm setting a context to the bull market, sideways market, and the bear market. And I think 2024 is going to be the sideways market, which can frustrate investors to a growth to great. So what should be a strategy? Now this is the last part of my presentation. I think what we will do, how do we intend to navigate this? And of course, the reason why I'm saying so, because once we know that if this is what going to market is going to behave, then your strategy should also adapt to the changing market dynamics. Am I right? Once you are playing T20, then your strategy should be different. If you are playing one-day match, your strategy should be different. If you are playing a 5-day match, should be strategy. At the same time, if you are playing in South Africa, then your strategy should be different. And when you are playing in a Indian subcontinent, your strategy should be different. The same way, we need to keep changing our strategy as per the market cycle. We believe that we will just do more profit booking actively in ensure to lock in the profits. We are not saying I'm going to do from tomorrow, but that's what the strategy we are going to deploy in 2024. Whether we do it in first quarter, whether we do it second quarter, whether we do, depending on the market cycle, we are going to do that. Number two, we are going to be more vigilant about the stock selection. We will focus more and more on quality. It's not that we are not focusing on that, but our scrutiny will become more deep in that sense to see that the quality is more important than the momentum. We will tighten our fall from high criteria just to ensure that if any company is going to underperform, might as well we take that. Again, I'm repeating, it is not going to happen from tomorrow. We are going to, it's not that we are going to expect the market to fall or become range bound from tomorrow only. But we are going to implement this in 2024. If you want to add more money, our advice would be, do not invest at one go. Invest in staggered manner, or maybe you can take SIP as a manner. And we will come in front of you where we believe that you can put in more money into the equity as an assets class. But if you don't want to time the market, if you don't want to do that, you can stagger or you can do the SIP. That's another way you can do that. We will also relook at our market cap allocations, which we are doing right now in our PMS, how much we should allocate to small, mid and large cap. Again, I repeat, we are not going to change from tomorrow. So please don't, otherwise we'll start calling it, when the market cap allocation we will take. So we are taking what are the measures we will take in 2024, not from tomorrow, to ensure that portfolio has been well managed. Also, not all sectors and companies are going to do well in 2024. So we're going to build portfolio which we believe are likely to perform well. So we'll try to be more cognizant, take a factors of sectors. And of course, we don't have any IP on the sectors, But we will become more careful with the sector selection, number one. And if suppose for some reason, if the sector we believe is going to do well, we'll also fine tune our exit criteria on those sectors. What should be your strategy now? I've suggested what we are going to do, but what should be your strategy? Our strategy should be simple. And please jot it down, or you can take a screenshot of that. But remember, and this should become in your wall, okay, these are the things I'm not going to do that. Do not chase momentum stocks. This is not the year for momentum stock. Stick to quality, even if it amounts to underperformance in a short period of time. Stay away from the herd mentality. Am I right? Because वो सेक्टर चलने लगा है तो मुझे भी लेने दो, मेरे फ्रेंड ने लिया तो मैं ले लूँगा. And remove recency bias, because I think that's one of the thing which many of the investors do become a victim of that, and we come to conclusion. I just give you another example. In our PMS customer, one customer called me, and I spoke to him. He said, the complete shrimp feed industry is not going to do well. We do want that company in our portfolio, and he has his argument, okay, why it should not do. I don't know whether this gentleman is attending this webinar or not. The same company in last 1 month is up by 11%. The market is down. So sometimes, we believe that company did not, and of course it did not do well. I must admit that also. But sometimes we become a victims of a recency bias. Okay, what has not worked, we'll assume that is not going to work, and hence we come to conclusion. Don't do that especially into the, except the fact that you made very good money in 2023, you may not make that money in 2024. Why? Because every year could Diwali to nahi hoti hai. Am I right? And that's where you need to first you come to the terms, then it's fine. Our expectation are that every year I should make 25%. Then basically, when that doesn't happen, you make only 22%, and you still feel dejected. But if your expectation is 5-7%, if you make 15-16%, then you'll feel happy. Am I right? So the higher happiness quotient is a function of what was your expectation, what is the reality is. So moment you keep the expectation low, then life becomes a little more easy, especially when the market is going to remain little range bound. As I told you, range bound market normally frustrate investors. And it will frustrate you whether you like it or not. And that's where I do not want you to allow your emotions to impair your decision making. I do not want to impair your emotions coming in and impair your decision making. My request would be, don't do that. Don't look at market from 3 to 6 or 9 months prism, because that's not the way you should be investing in. In fact, yesterday one PMS customer came to our office when one of his colleague, and then while discussing with him, he said that, I want to invest in the market and I want to put a distant investment. And when I said, do you need that money? And he said, yes, I do have my daughter's marriage coming up, and we are searching for a groom. And I said, please don't invest, because you are then timing the market to the perfection. If for some reason if the market doesn't do well, you'll be forced to get out. So when I said come to the market, equity market with minimum 3 to 5 years period. So I don't think we need to get a little perturbed up by what happens to 3 months, 6 months, or 9 months kind of stuff. Having said that, it's a good opportunity. 2024 will give you a good opportunity to create long-term wealth. Am I right? Why am I saying so? Because the script that you wanted to buy, you could not buy in 2023 because market script kept on rising. I think 2024 will give you a good opportunity to buy. Do not miss out on that opportunity. Now someone would say, अरे market range bound लगता है तो क्यों नहीं निकल जाए सबसे? You can't time the market. You don't stay away from the market. Am I right? That's not a good option only, because you will not know when the bottom has been formed. So hence, staying away from the market is not a good option. So if you are not confident about navigating the market cycle, take the help of a professional. Whoever the professional you believe in, take the help of professional. Why I'm saying so? Because there is a risk when you do it DIY self. In bull market, you don't see the need. Am I right? But when the market is bear or when the market is a sideways, there is a case for a professional help. Why? Because in DIY, human emotions comes in, fear or greed. Professionally managed guy has no emotions to come in. You try to take cash calls, you try to time the market. Professional manager is unlikely to take cash calls. Retail investors do suffer from recency bias, which has not been the case with professionally managed. Too many stocks retail investors would have in your portfolio. The professionally managed guy would have to consider portfolio which has a higher percentage of probability of giving you higher returns. Again, DIY has a challenge in terms of unscientific allocations. Why? मार्केट कैप सारे गलत हो सकता है, सेक्टर एलोकेशन कुछ हेवायर हो सकता है, नंबर ऑफ स्टॉक्स हेवायर हो सकता है, सिंगल स्टॉक एक्सपोजर कुड बी हेवायर, while professionally managed will have a systematic allocations. And hence, in an overall, DIY is more unstructured approach which tends to underperform, while the professionally managed will have more structured approach that's going to do well. So what are we saying in nutshell? We are suggesting reducing expectations on the market. Market movement can frustrate you, but you need to control your emotions in 2000. Shift portfolio from momentum to quality. Instead of putting additional money at one go, please check it or use SIP as an option, but do not take cash calls. We are not suggesting to go out of the market and come back. We are not suggesting that. Why? Because you cannot time the market. And for some reason you are not confident, since this year is going to be a tough year for the retail investors, take a help of professional. So what should be a strategy as investors? If you are holding stocks, most probably you should give it to the professional manager. Okay, if you are a personal holder. You want to invest more, invest in a staggered or SIP manner. But do not exit from the market if you don't need the funds. Please remember that. So what are the factors that are going to play in 2000? They are positive, neutral and negative. Neutral is definitely a general election. There could be a downside, but there is no upside that we believe. Positive, India would be one of the fastest growing economies despite some slowdown that we have. FPI will continue to invest in the Indian equity market, but inflow would be muted, not as good as 1.71 lakh crore, but we will see positive inflow. Retail inflow is likely to remain robust in 2024, and El Nino impact is going to weather out by June 2024, which means that our southwest monsoon probably is very high, that we should have a good monsoon. Negative, if BJP does not come to the power, we do believe that 20% decline that can happen to the market. It will take about 6 months to recover that. Valuations are rich and growth in earnings are going to decline. That's a negative for the market. World economy slowing down will further put impediment in terms of commanding better valuation. And I think if inflation remains sticky, then interest rate cut may not be so big. That's a risk. Very famous quote: "A rising tide tends to lift all boats, but you find out who's swimming naked when the tide goes out." In other words, many investors have seen their personal portfolio doing very well. Challenge is what happens when the market moves sideways or turns bearish. And hence, we have seen in the past that gains made in the bullish market evade repo rates in the sideways market and the bearish market. There is a very famous saying in the Latin that "Audentis fortuna lovet," which means fortune favors the brave. I have said in the past also, you need to have two things in the market to create wealth, and that the one is that you need to be brave, optimistic, and the brave in the market. बोलते छाती होनी चाहिए to create wealth from the market. And all investors, wealthy investors who have created a lot of wealth from the equity market, they have been brave. And once you are brave, fortune will fall in place in your favor. What are the key risk factors to our observation in 2020? Definitely inflation remains tricky. Election outcome that we discuss about, deficits, if for some reason if India is not able to control the deficit, or global economy slowdown much higher than what the general consensus seems to be. El Nino effect, for some example, continues in the second year also. Normally doesn't happen. For some time it basically get impacted the southwest monsoon then and the new virus, but not the COVID. I must tell you that. These are the risks to our prediction. So 2024 is not a year of making easy money, but it will give you good opportunity to buy your favorite stocks to create long-term wealth. Remember, this is a very, very critical point that I want everyone to focus on. And please remember, 2024 will make a nice base for the next bull rally. I again repeat, 2024 is going to make a nice base to give a next leg of bull rally. With this, let's open the floor for question answer.
So this first question for today is from Mr. Sanjay. Is it better to shift from mid and small cap to large cap this year?
Sanjay ji, my advice would be no. But within the mid and small cap, you need to be a little more conscious of what quality of company you are buying in. So, there is nothing kind of that you shift from mid and small cap to large cap. And because what is the guarantee that large, because ultimately you're going to buy a stock. If that company large cap is not going to perform, what's the point? And if the mid and small cap which is performing and you get out of it, then you do run a risk of a performing stock to going to the non-performing stock. So don't do that. What you should look at it, become more conscious of what quality of company that you are getting into mid and small cap. I think that's very, very critical now. So don't chase momentum within the mid and small cap, because 45% return at the index level is a very good returns. Am I right? So and our sense is that even 2024 mid and small cap should outperform. The only problem with the mid and small cap that return would not be linear in that fashion. So it could happen that returns, whatever that may come, only will come in one quarter and may not come, and the rest of the 3 quarters it may not come also. So hence, your stock selection should become, Sanjay ji, very, very critical within the mid and small cap space, rather than just blindly going out of mid and small cap to large cap.
So this next question is from Mr. Rajesh. Hi sir, as we experienced bull rally since few months, do you expect any correction before election?
Rajesh ji, very difficult to say whether we expect corrections before election. In fact, for some reason, if that happens, I think then if there is a substantial correction before election, then we should expect post-election rally. Why? Because normally if the negative news is already there, which is there in the price, then normally once the news that event happens, then it should positive. I don't think we should expect substantial fall before election. I don't think so that's going to happen. And of course, but it's also a function of what happens geopolitical situation. Like other day, I've been informed in Bombay there was a shortage of petrol and diesel because of truck strike. And then there is a Red Sea problem that is happening right now. And Musk has announced that. So because of some geopolitical tension, if that happens, it's a different story. But because of election, market correcting because of election outcome looks little doubtful at this point of time.
So this next question is from Mr. Prashant. What's your view on private banking sector for 2024?
Prashant sir, our sense is that private sector banks did not do well in 2023. I think that could be another year of underperformance that could happen in 2024. Why? Because if the world economy is going to slow down, the banking business should slow down. Second thing, RBI has been time and again has been saying that unsecured loans, which has been the retail loans, which has been the growth driver for the banks, will continue to remain a little challenge for them. So I think the NPA, the NIM, and whatever the deposit growth and so on and so forth, what we saw in 2023 is unlikely to get repeated in 2024. So that market will take cognizance of that, and hence I think we should expect little muted kind of returns only from private sector banks in 2024.
So this question is from Mr. Neeraj. Jai Hind Sunil ji, excellent presentation and logical prediction. With Bharat's economy aiming to become the third largest global economy in next few years, the vocal for local, China +1, Europe +1 and Atmanirbhar Bharat all would contribute to a propel economic growth. This would not leave the market upswing from happening. What is your say on this?
So Neeraj ji, I 100% agree with you. We are not bearish on Indian economy or Indian market. It's just that we are saying that 2022 was maybe a good consolidation phase for market to make make a nice base for next leg of rally. And I agree with you. Vocal for local, Atmanirbhar Bharat, China +1 strategy, government reforms, government focus on infrastructure, government focus on tourism is going to basically make a big impact, and India will become a third largest. So I don't think there is a debate whether India will become or not. I think it's already assumed that it's going to become. And if economy grows, there is no reason why Indian equity market should not grow. So 2024 is a year for consolidation, which will make a nice base for the next leg of rally to come.
So this next question is from Mr. Nand Kumar. Can we expect good rally among large cap banks such as ICICI, HDFC, etc., considering the economic growth estimated in 2024 and banking is the pivot point?
So Nand Kumarji, I will not go company specific, but our view as the previous attendee asked me, we are little not so gung-ho about the private sector bank as we speak. And if you look at 2023, when the market did extremely well, some of the large private sector banks actually underperformed very significantly.
So this next question is from Mr. Durganavar. Will election results influence positive or negative price of gold after election?
Sir, I have no analysis on that what happens to the gold post-election. I've not done the study, so I would not be able to comment. But I don't think there will be any correlation there also, to be honest with you. And I don't see any logical reason why there should be some correlation between the gold and the election result. I don't see any this one. But anyway, I have not done any analysis, sir. I will not be able to comment on that.
So this next question is from Mr. Ashok. One of my stock is up by 70% in 1 year. Should I book profit now?
No, sir. Again, I request all of you. There is a very famous Peter Lynch saying, which says that do not cut flowers, do not water the weeds. The same logic applies. Reason for exit should be that is the company is running ahead of fundamentals, then yes. If the fundamentals are improving and this company is doing well, why should you basically get out, Ashokji? So I think first you need to look at it. Only I said those don't chase momentum stocks. Number one. Number two, stocks which are running ahead of the fundamentals, they are bound to face some amount of headwinds and they may underperform. So please, my suggestion would be just purely because it's gone up by 70%, should I get out? Answer no.
So along with other investors, Mr. Naresh has this question. Can you please give your views on IT sector this year?
So, Nareshji, what has happened, like if the global economy is going to slow down, I think IT sector will face some kind of headwinds that can come in. So I think I would suggest that within IT sector, you have to be even stock specific. I'm not saying all companies within IT sector is going to underperform. But many of these companies which likely to underperform purely because of slowdown in the global economy normally tends to result into a slower IT budgets. And if that's going to happen, I think the revenue growth can take some beating. That's what my sense is. And our in-house view, which I have not covered this time about the rupee versus dollar, our in-house was that rupee is not likely to depreciate so much. And if that is so, the IT software which do get a gain because of depreciation of the rupee will also not going to translate this time. So my sense is that few companies are going to do well, but overall as an IT sector maybe underperform in 2024.
This next question is from Mr. Archit. Sir, how is it possible Nifty goes high when interest rate going up and again Nifty will go high when interest rates will go down? Is the news of interest rate falling not in the price so that when they really start rate cut, market can fall?
No, how is it possible Nifty goes high when the interest rate going up and again Nifty will go high when the interest rate will go down? Is the news of interest rate falling not in the price so that when they really start cut rate, market can fall? So, see, I think market is not only a function of interest rate, am I right? It's a function of various, what is the liquidity, what is the growth in the earnings, what is the risk on strategy, risk off strategy, and so on and so forth. So, interest rate is one of the factors, not the only factor. Hence, to attribute rise and fall in the market to only one factor, I think is not a fair statement to make.
So, this next question is by Mr. Anshul. Hello sir, which sectors are likely to underperform in 2024?
So why do we want to go in underperformance? I did mention which are the sectors that likely to, IT looks like a underperformer, private sector banks can underperform. You see, one of the reasons, FPI normally invest in these two sectors very heavily. If you look at the total inflow, these sectors too account for maximum this. And as I mentioned that we do expect FPI inflows to be little muted in 2024. So if that is the case, and then I think maybe IT software and again I repeat, few companies that we do own are likely to do well within our PMS portfolio, within the IT. So don't come back tomorrow and say, "Arey, मेरे में तो है, लेकिन underperform करने वाला सुनील ने तो बताया था." So why are you holding that stock? So reason we hold was we do believe those companies can do well, but overall I think it's going to underperform. And again, I'm not saying that they are going to underperform tomorrow. I am saying as a year, they are going to underperform. So sometimes, my prediction for 1 year, and you start believing that it's going to happen tomorrow. I give a classical example. In the January, when I said the market is going to go up and give 10 returns in January 2023, market did go down in the month of Jan, Feb and March. अरे से तुम्हारा prediction गलत हो गया. Many people meant the statement. I said, sir, my prediction was not for the 1 month or 2 months. My prediction was for the full year. Same way, I said, if I am going to invest 1 lakh crore, and in January they sold very heavily, in the February they sold very heavily, I said, what happens to your prediction? But I never made a prediction for Jan, Feb. I made a prediction for the full year. Am I right? So remember, whatever prediction I'm making is for the full year. So don't come back tomorrow and say, this has happened, this has happened. This is for the full year we are making a prediction. Hence, IT can underperform, okay? But for 2024 as a year, it can outperform in the 1 quarter, it can outperform second quarter also. But as a year, over the year, 2024 is likely to underperform. So don't get my statement wrongly interpreted and you will come with the statement, ye hua. Don't do that.
So this next question is from Mr. Jayant. Hi Sunilji, excellent analysis. I'd like to know your views on travel, realty and NBFC sectors.
Thanks a lot, Jayanji. I think view on travel and tourism looks a little promising, but you need to also be cognizant of the fact that a lot of good things are there in the price. The kind of valuation they are commanding, I think, is extremely high. Some of the travel, but overall, so okay, let's segregate between the business side and the valuation side. I think the business should do well. The valuations are anyway priced in that manner. So you need to be very, very careful what company you get into within the tourism or travel industry to get in. Realty and NBFC may underperform. They did extremely well in 2023, which contrary to my view, but they did extremely well. Unlikely they are going to repeat that performance in 2024.
So this next question is your views on sugar and EV, also views on Adani stocks on CS judgment today.
So I've not gone through that judgment, to be honest with you, of Adani, but I have been informed that Adani shares were up. So I think the market seems to have taken in this stride. And EV and sugar, I think it's a long. See, if you look at the government, whether it's a molasses C or molasses B, I think somewhere government is sending a very clear-cut message. They want sugar industries to grow. Why they want to grow? Because sugar is produced from sugarcane, and sugarcane is a farmer. They don't want to basically disturb that equation. So I think government focus is to make sugar industry strong, and I think government policy action would be in favor of sugar industries, and hence we believe that sugar companies should do well. Maybe they could be 1 or 2 quarters of underperform. That's a different story, and it's also a function of what government announces in terms of changes in terms of prices of molasses and so on and so forth. But overall, I think EV story looks to be very much, it's a long-term structural story, because India wants to reduce its dependence on the fossil fuel, because we import fossil fuels, am I right? And hence the ethanol blending program is going to continue, whether there could be temporary setback, but I think the story looks extremely promising.
So Mr. Tahir wants to know your views on textile industry, sir.
Textile, again, most of these players within the textile are basically export oriented, and I did mention that the outlook on the export front looks little not so promising. So I think they will see some kind of headwinds in terms of the top line growth and in turn the bottom line growth. So my sense is that I don't think they are going to be the really outperformer kind of stuff in 2024.
So this next question is from Mr. Ravindra. Given the prediction for 2024, is it right to redesign or rebalance a portfolio using Mojo stocks? That's the question.
No, if you're holding the Mojo stock, then you don't do anything, sir. My advice would be that actually, because anyway you're holding good quality companies within your portfolio, then you don't redesign that portfolio. But as and when the churn happens, then don't allow your human emotions to not to do that, and please do that in a very disciplined manner. But see, again, I'm not expecting anything to happen from tomorrow. I think again I want to send a message loud and clear. मैंने आज बोला कल से कुछ नहीं होने वाला है. This prediction is for the full year. It is not for 1 day or 1 month or 1 quarter or 1 half. Am I right? So the full year. So do not take any action in panic or in haste to do that. I must clarify here.
So this next question is from Mr. Raju. So he's asking, is it possible that your prediction might be compromised due to some economic policies which new government might bring in, like agriculture sector?
No, when you say my prediction is compromised, I don't know what do you mean by that actually. My prediction is a function of what the data we have on the table at this point of time, and based on that data, we make the prediction. There are various events that takes place, which sometimes it's not factored in. For example, in my 2023 prediction, I did not budget for Israel-Hamas war. Am I right? It did happen, but so there are various events that can take place, like US bond yield moved up. When I made a presentation in 2023, I did not budget for that. Am I right? So it's a market is a function of various data points, coming in, and based on that, you take a decision on that, isn't it? So there will be some news which will be positive, there will be some news will be negative. What we are seeing based on present data available, this is what we believe. What government will do, what government action policy will do, I don't think we have nobody. We are not insider to the government that we can predict, okay, this will happen, this will not happen. Government can surprise you in any manner, am I right? So we don't factor in those kind of factors because which are beyond our control, and what you cannot do beyond our control, you should never factor in your analysis.
So that's it with the Q&A, sir.
Oh, that's the thing. So thanks a lot, everyone. Just to summarize, we are saying 2024 will give you an excellent opportunity to create wealth going forward. You will give you the opportunity to buy the stocks that you could not buy in 2020. In fact, 2023 is a year which is going to define the next leg of rally for the bull market. And we strongly believe that Indian economy is going to do extremely well in next 3 to 4 years. The foundation for that rally of the equity will get built in 2024. Having said that, market overall for 2024 is likely to remain a little muted and range bound, and hence you need to lower your expectation from the equity as an asset class. With this, thanks a lot and thanks for patient listening for my 1.5 hour webinar. Please do write to us in case if you need more data, because I keep coming in front of you every now and then. More than happy to take up your questions. With this, thanks a lot. Have a great time.
Thank you for attending today's event. Hoping to see you all come for the upcoming events as well. Thank you and have a great evening.